Hi, everyone. I'm Rosemary Miller here with Stephen Ehrlich, the director of Forbes Digital Assets, here to tell us about the SEC possibly approving Bitcoin ETF applications as soon as this Wednesday. Thank you so much for joining me today, Steve.
All right. Thanks, Rosemary.
Absolutely. So, Steve, why do people think one is going to be approved as soon as this Wednesday?
Right. So it kind of comes down to the SEC's calendar. Typically, when an issuer applies to launch an ETF, the SEC has up until 240 days to give a go and no go decision. Many times it doesn't get that far. The SEC will approve something before then, or if the issuer or proposed issuer senses that they're not going to get approval, they will withdraw the application before they actually get the formal rejection. uh, and and that's happened over and over again for Bitcoin, uh, going all the way back to 2013 when Tyler and Cameron Winklevoss of Facebook fame tried to launch the first spot Bitcoin ETF. Uh, there's been dozens of potential products that have gone before the SEC, and the SEC every single time has whacked them down, has rejected them, claiming pretty much that they don't trust the underlying spot Bitcoin market. They claim that the market is not free from fraud and manipulation, which is obviously a very important tenet of investor safety. However, things have changed this time around. It started with a company called Grayscale, which is the asset management arm of Digital Currency Group, which is a kind of a well-known sort of like crypto polyglot firm, for lack of a better term. They have proposed many times to convert their $27 billion closed Bitcoin fund called the Grayscale Bitcoin Trust into an ETF to make it just more user-friendly for investors. The SEC has time and time again turned them down. This time, however, Grayscale sued the SEC. They sued them last year, claiming that the SEC erred in rejecting the application, and a DC circuit, I guess a group of DC appellate justices ruled very strongly in favor of Grayscale and pretty much threw out the SEC's justification for rejecting spot Bitcoin ETFs under the sort of the clause of fraud and manipulative markets. And that sort of set off just this race to, I think another analyst at Bloomberg called it the Kentucky Derby, because the belief now is that the SEC has no more reasons to reject spot Bitcoin ETFs, and there are currently 13 pending before them, many from blue chip investment firms like Invesco, BlackRock, and Fidelity. And the deadline for the very first of this crop of 13 ETFs to get their final go no go decision is going to be this Wednesday, January 10th. So going back to your original question, the reason why Wednesday is such an important day is because the expectation is that the SEC is going to approve this first application, which is proposed to be issued by ARK Invest and 21 Shares. ARK Invest is obviously led by superstar investor Cathie Wood. And in order to avoid sort of picking and choosing winners, the expectation is that the SEC is going to let several ETF applications launch and begin trading right away so that customers can choose which product they want to purchase.
So, I do want to know what exactly is a spot ETF and how does it differ from a futures ETF in buying on the spot market?
That is a good question, and it sort of relates to why there's been so much anticipation for the spot Bitcoin ETF. Anyone that's even casually followed crypto in recent years knows about some of the security issues associated with it, the challenges that come from holding your cryptocurrency in a wallet, and even if you patronize a service like Coinbase or Kraken, Robinhood, to hold your crypto, they're not FDIC insured. So if something happens to the exchange, like what happened to FTX, customers are left without any sort of restitution. And it's just, I wouldn't say completely unregulated, but it's not on par with traditional banks or even regular brokers that are better regulated and have better oversight as far as segregating and custodying assets. I know that's a mouthful. And basically what a spot Bitcoin ETF will allow is for anybody to get exposure, direct exposure to Bitcoin or potentially other assets if and when the SEC approves them, through their account without having to deal with the headache of actually setting up an account at an exchange and linking your bank account and having to safeguard it yourself and worry about theft and so on and so forth. All those things magically go off the table. Now, as you mentioned in your question, right now what we're looking for is a spot ETF, which basically means that one of these issuers would buy Bitcoin, issue shares against it, and then those could trade on the market. There are several Bitcoin ETFs already on the market. These are called futures ETFs, specifically cash settled futures ETFs, and they actually launched in the fall of 2021, around the time of another big bull run. And these try as best as they can to mirror the spot price of Bitcoin. They typically work by buying monthly Bitcoin contracts, I believe, at the Chicago Mercantile Exchange. And then when those roll off, they buy them again and again and again. The issue is that it's becoming harder, especially during periods of high volatility, to maintain parity with the price of Bitcoin, especially without incurring extra costs for investors. Because remember, each time the price of Bitcoin goes up, that typically means that the futures contracts for that same amount of Bitcoin are going to go up again. And if you have to keep buying it, that means you're paying more for the same amount of Bitcoin month to month to month, as opposed to a spot Bitcoin ETF where you just buy it and then you hold it. So some of the issuers behind these cash settled futures ETFs are starting to become a little bit less competitive. And that, I believe, is a cause for concern for them moving forward if and when these spot ETFs actually happen.
Mm-hmm. So going back to some of these applications possibly being approved as soon as this Wednesday, who are likely to be some of the winners and who's likely to be some of the losers in this scenario?
Well, one thing that I don't expect to happen is for there to be a winner-take-all scenario like we saw with the Bitcoin futures ETFs. In that case, the ProShares Bitcoin futures ETF got a couple-week head start over everybody else, and they sucked up, I believe, more than $1 billion in AUM the first day, which set a record even bigger than GLD. And basically every other issuer lost out, and it just has a very, very small fraction of that total amount, because when it comes to ETFs, that is a numbers game. The more volume you have, that means the more liquidity you have, lower slippage. Theoretically, you can compress fees and so on and so forth. So I don't expect that to happen here. When the SEC approved several cash-settled futures ETFs to begin trading last fall, I believe they let 5 or 6 go off at the same time. And that's, again, I think that's going to happen here. As far as what things investors should think about as they're considering these different ETFs, obviously fees is going to be a big one. Right now, I believe like the average fee for an ETF right now is about 0.37%. And I actually have it up on my computer right now. These are numbers from Bloomberg. And I mean, for instance, BlackRock, I think, is going to have 30 basis points with a starting price of 20. There are several Invesco, I believe ARC21 and Bitwise that are actually going to be waiving their fees for a certain period of time. And many of the fees, I think, right now are going to be somewhere between 20 and 50 basis points. One major outlier, however, is going to be Grayscale. They are the ones with GPTC. This is a fund that right now houses 619,000 Bitcoin worth about $27 billion at today's prices. When this closed-end fund has typically charged 200 basis points or 2% management fee, which makes it very much a cash cow for the company. A big question was what fee they were going to drop it down to once ETFs started, because 200 basis points is just frankly non-competitive in the ETF world. And they announced that right now they're only going to drop it down to 1.5% or 150 basis points, which is, again, about 100 basis points higher than pretty much everybody else. And that is really sort of curious to me. I mean, if you talk to Grayscale, and they've said this to me on multiple interviews throughout the years, I mean, they typically say that the operational experience matters, being able to deal with crypto, especially during periods of uncertainty. For instance, if there's a fork in Bitcoin, and just custodying and just managing these products that is a premium service that they think will justify the higher fee. Will customers agree? I don't know. That's a lot of money to be leaving on the table when you can give your money to a blue chip firm like BlackRock or Fidelity, and get that reputational get those reputational benefits and pay much lower fees.
So how much money is expected to come in immediately?
It's really hard to tell. I mean, $1 billion is sort of the goalpost, at least as far as Bitcoin futures. I know that I mean the ETF industry is about $8 trillion. I mean the total capital markets is much more than that. Frankly, I am not entirely sure. I would not be surprised if we are underwhelmed at the very beginning, where we see just a few $100 million, or it might take a little while to get to $1 billion, although I do think it's going to grow over time. I mean, one of the things that's also worth keeping in mind, too, is that there's going to be a difference between new money coming into crypto and just money being cycled around into these products. I mean, for instance, ARK Invest has been selling some of their Coinbase shares as a way of just kind of balancing portfolios that they offer. They recently put a sizable chunk into ProShares' Bitcoin Futures ETF BITO, and the expectation there is that they're going to then move it into one of these spot ETFs. So clearly AUM for that could go up, but that doesn't mean there's new money coming into the space. That said, I do think the new money is going to come in over time as it finally has become easier to get exposure. You can just direct your broker, so on and so forth, to put a certain allocation into one of these products if you so choose. One other thing that I think is also important to keep in mind is that for many, just because the SEC has approved these products and they're trading on exchanges like NASDAQ or CBOE or the New York Stock Exchange, brokers are also going to be doing their own due diligence on these products too before they're actually going to expose them to customers. And each broker might be a little bit different. Some might offer right away. Some might take a few weeks or a few months to see how they operate before they're actually going to let clients send money there. So that's one additional hurdle that I think is important to keep in mind. It's not necessarily a stop sign, but it could be a little bit of a speed bump, especially once we start talking about perhaps like pension funds and other endowments that could make sizable allotments to the space.
Well, Steve, what can we expect with the price of Bitcoin?
That's another really good question, because there's a few things to consider here. In the past, when there's been big moments like this, they've been very much buy the rumor, sell the news types of scenarios. What I'm referring to here, I mean, for one, when Coinbase went public in April of 2021 through a direct listing, Bitcoin had approached $69,000, $70,000, and it went down after Coinbase went public, and Coinbase's stock is far down since then. Bitcoin again approached $70,000 in October 2021 when the Bitcoin Futures ETFs were given approval by the SEC, and it collapsed again. Is that going to happen again this time? It's hard to. There's reasons to say yes. There's reasons to say no. Reasons to say yes. I mean, Bitcoin is up 50% over the last 3 months, but in the last month, it's only up about 4%. So that signals to me that the market's kind of waiting for a new direction, and it may come down to whether or not people think that the Bitcoin ETF approvals are already priced in, and it may again be its future direction may be determined by how much money actually comes in. At the same point, and this is a critical distinction to make when it comes to spot Bitcoin ETFs as opposed to the cash settled futures ETFs. If a company or an issuer is offering a spot Bitcoin ETF, that means they actually have to go out and physically procure the Bitcoin and then keep it at a custodian, like Coinbase. I believe Fidelity is custodying its own assets, but that's Bitcoin that has to be bought on the spot market and then has to be taken off the market and held in reserve for redemptions. With a cash settled futures ETF, that does not happen. That's just literally contracts where people are betting on the price of Bitcoin one way or another. So if there is a surge, and I know that one of the big trends that we've been seeing over the end of last year is Bitcoin being taken away from exchanges, which means liquidity on exchanges, and exchanges are just one part of the total liquidity picture for crypto. But if that's happening, that could lead to it could accentuate moves in either direction, and if there is bullish demand, that could lead to to further surges. But it's really hard to predict exactly what's going to happen. My sense is that the price of Bitcoin is going to be pretty volatile over the next few weeks.
Well, as always, Steve, thank you so much for joining me today.
Great. Thanks, Rosemary.
Absolutely.